The question this morning from every investor: what do central banks do next? Our next guest should have a pretty good idea. He deals with central banks and sovereign wealth fund clients at PIMCO, the world's largest bond fund. He's also an Ivy League academic, a former assistant secretary of the Treasury. With us this morning, InsideTrack, Richard Clarida of PIMCO. He's an advisor there. Richard, the gut reaction from investors was euphoria. You're a seasoned economist. You can look big picture. What's your gut reaction?
Well, I don't want to say it's a one-day story, but it's certainly not a long-term solution to Europe's problems. It was a coordinated measure, so they got a lot of bang for the buck. But the reality is that there's very little borrowing in this program now, and the thought that by lowering rates a little bit, they're going to get a lot of more, I think, is really not going to happen.
So more of a symbolic gesture.
It really shows that central banks are concerned and are willing to coordinate, at least at this level, but this is not going to be the final answer to this problem in Europe.
Olli Rehn himself, EU commissioner there of monetary affairs, says we have 10 days to wrap up this crisis. Investors have to know better.
Oh, my. Well, you know, we've been talking about this, Sarah, since May of 2010, and I think, I certainly hope they solve it in 10 days. There's a big meeting December 9th, but I'm skeptical on that. We'll have to see.
So what do we need to see? We keep hearing fiscal union, integration. What does that really mean?
The challenge with fiscal union, Sarah, it's going to take 2 or 3 years. They have to change treaties. They've got to get 27 parliaments to ratify this. The near-term problem is both liquidity of sovereigns as well as potentially solvency, and now it's in the banking system. And so that's why people are looking at the ECB. They've got the one balance sheet that could be deployed in size, like the Fed did with QE. And right now, Mr. Draghi is saying, don't look to us to get in there.
He said it this morning. What's it going to take?
Well, he's urging more coordination and agreement on fiscal policy and fiscal union.
Leaders have to move, and then you see the ECB coming in.
That's a necessary condition. I think Mr. Draghi's made it clear that there needs to be more steps on the fiscal end. That's necessary. We don't know what's sufficient to get the ECB engaged.
We hear that there is potentially a greater role for the IMF. We hear about the EFSF. We hear about the ECB. All of these acronyms. Can anybody save Europe at this point?
I've got a scorecard at home. The fact of the matter is the IMF doesn't have a big enough balance sheet. The IMF could maybe lend $300 or $400 billion, but we're talking about a number over $1 trillion here. And then the EFSF, that every day that goes by, it looks less and less like a viable option right here.
So what's the best case scenario?
My goodness. Well, the best case scenario is a big agreement in substance that gets the ECB engaged, that restores confidence to the markets. You know, Switzerland's a great example. Switzerland said, we are being hurt by a strong currency. We're going to intervene in the market, prevent the rates from getting too strong, and then it actually hasn't cost them that much money to prevent that appreciation. So a credible move by a central bank that's willing to backstop it with its balance sheet can have a big impact.
And what's the worst case scenario in terms of what we could see in the sovereign debt markets?
Well, we don't even want to think about it. The worst case scenario is a run of bank failures, collapsing confidence in sovereigns, the inability of the Italians to roll over the debt, potentially the end of the euro, which were to happen would make Lehman Brothers look like a picnic.
We saw yesterday that the Fed still has a major role to play here in global financial markets. It can turn sentiment on a dime. What else can the Fed do now?
Well, I think the Fed's focus is going to be on the U.S. economy. I think the Fed has done Operation Twist. Ms. Yellen has said that the Fed will enhance and improve its communication strategy. And, of course, they reserve the right to do QE3. I don't think we're at the QE3 point right now. But as the year goes into 2012, we could see QE3 again.
All right. Rich Clarida, thanks very much for joining us here on the Inside Track this morning. He is, of course, a global strategic advisor at PIMCO. Says we may see QE3, but not just yet.